Hey there, fellow investors. Welcome back to AshProsperity. Today we got a hot topic to discuss. Bond yields. Yes, that's right. They are surging and it's causing a quiet stir in the financial world. But what does this mean for you and your investments? Well, that's what we are going to unpack. In our first segment, let's start with the basic. Why are the bond yields surging and what causing all the commotion? Imagine the benchmark US Treasury yield hitting 5%. That's a level we haven't seen in quite a while. But why a sudden climb? Well, the Fed Reserve higher for a longer approach is a significant factor. Fed Reserve Chair Jerome Powell recently spoke at a New York economic club, and his words left many of us scratching our heads. On one hand, he mentioned tightening financial conditions due to a stronger economy, but on other, he acknowledged emerging risks. Now here where it gets more interesting. Some folks interpreted Powell's word as a green light to keep rates steady for most of upcoming years. This led to a surge in benchmark 10-year Treasury yield, reaching 5%, a level last seen in 2007. And of course, the stock market had its reaction. But what do the experts think? Let's turn to them for some guidance. Bill Gross, the bond king, believes yield could go even higher in the short run. He's looking at 5% and he's not alone. Billionaire investor Ray Dalio also think the 10-year rate might test that 5% mark. So what's the deal? Why are these experts so bullish on yields? The Fed's aggressive rate hike since 2022 plays a significant role. Investors are grappling with the impact of deepening treasury deficit. Now let's get personal. What does all of this mean for your investments? If you have been using stocks to boost your returns and bonds to maintain your portfolio, the rising bond yields can be a game changer. It's no secret that stock investors aren't big fan of high rates. The rise in long-term bond yields indicate the market believes rate will stay high for an extended period. So what's the bottom line? The Fed might not cut rate anytime soon. Is there a cap on these rising yields? Some experts think 5% might be near-term limit depending on the factors like inflation and economic growth. But this situation is fluid and there's still some uncertainty. So whether you are an experienced investor or just starting your financial journey, it's essential to stay informed and adapt to an evolving landscape. That's the wrap for today's video. Thanks for joining AshProsperity. Until next time, stay curious and stay prosperous.